The US dollar ended Sunday's trading session in Iraq with a slight increase, drawing the attention of currency traders, business owners, investors, and citizens who closely monitor exchange rate movements every day. According to the latest market survey, the US dollar traded in Baghdad's Al-Khifa and Al-Harithia central exchanges at 150,400 Iraqi dinars per 100 US dollars, compared with the morning session, when the exchange rate stood at 153,300 dinars per $100. Although the increase appears relatively small, it reflects the continuous fluctuations taking place within Iraq's foreign exchange market and highlights the importance of monitoring daily developments in both official and parallel market rates. The closing figures indicate that the market remained active throughout the day, with exchange rates adjusting as buying and selling demand changed during trading hours. In Baghdad's local exchange shops, the selling price of the US dollar reached 154,000 Iraqi dinars per 100 US dollars, while the buying price settled at 153,000 dinars. These figures demonstrate the normal spread maintained by exchange businesses between buying and selling prices, allowing exchange offices to cover operational costs while managing currency supply and demand. Meanwhile, in the Kurdistan region, the city of Erbil also witnessed relatively stable trading activity. Exchange shops there sold the US dollar at 153,100 Iraqi dinars per $100, while the buying price stood at 153,050 dinars. The narrow difference between buying and selling prices in Erbil reflects a relatively balanced local market, where demand and supply remained fairly consistent throughout the trading session. Although Sunday's increase from 153,300 to 153,400 dinars per $100 may seem modest, even small changes in exchange rates often attract significant attention across Iraq. Currency movements directly influence import costs, wholesale prices, retail businesses, and the purchasing decisions of companies and consumers alike. Many traders monitor these changes throughout the day because even slight adjustments can affect profit margins, especially for businesses dealing with international suppliers. The Iraqi economy continues to rely heavily on imports for a wide range of consumer products, industrial equipment, electronics, food items, medicines, and construction materials. Since most imported goods are purchased in US dollars, fluctuations in the exchange rate have a direct impact on business costs. When the dollar strengthens in the parallel market, importers generally face higher purchasing expenses, which can eventually influence retail prices across local markets. For ordinary Iraqi citizens, exchange rate movements remain an important economic indicator. Families planning major purchases, students studying abroad, travelers preparing international trips, and businesses making overseas payments all keep a close watch on the value of the US dollar. While a movement of only 100 dinars per $100 may not immediately produce noticeable changes in daily expenses, consistent upward or downward trends often influence consumer confidence in financial planning. Financial experts frequently explain that Iraq operates with both an official exchange rate established by the Central Bank of Iraq and a parallel market rate determined by market forces. The official exchange rate serves government financial operations and licensed banking transactions, while the parallel market reflects actual buying and selling activity conducted through exchange offices and local currency dealers. Differences between these markets arise because of varying levels of dollar availability, commercial demand, import financing requirements, and overall market sentiment. Throughout recent months, Iraqi authorities have continued implementing measures designed to stabilize the foreign exchange market. The central bank has introduced reforms aimed at improving transparency, strengthening banking compliance, regulating international financial transfers, and expanding legitimate access to foreign currency through licensed financial institutions. These efforts are intended to narrow the gap between official and parallel market exchange rates while promoting greater confidence in Iraq's financial system. Many analysts believe that currency stability depends not only on domestic monetary policy, but also on global financial conditions. International oil prices, U.S. monetary policy, inflation trends, regional geopolitical developments, and worldwide demand for the U.S. dollar all contribute to exchange rate movements in emerging economies, including Iraq. Because Iraq earns most of its government revenue through oil exports priced in U.S. dollars, fluctuations in global energy markets often influence liquidity and financial conditions within the country. Oil revenue remains the backbone of Iraq's economy. Higher oil prices generally improve government income, strengthen foreign currency reserves, and provide greater flexibility for public spending. Conversely, periods of lower oil prices may place pressure on public finances, making exchange rate management more challenging. As a result, Iraqi financial officials closely monitor developments in international energy markets alongside domestic economic indicators. The slight increase observed during Sunday's trading session may also reflect ordinary market dynamics rather than any major structural change. Throughout a normal trading day, exchange rates frequently move in response to changes in customer demand, commercial transactions, import payments, and currency availability. Dealers continuously adjust their quoted prices as buying and selling volumes fluctuate during business hours. Import companies remain among the largest purchasers of U.S. dollars within Iraq. Businesses importing automobiles, machinery, consumer electronics, medical equipment, household goods, and food products regularly require significant quantities of foreign currency to complete international transactions. As demand from importers rises, exchange rates in the parallel market may experience upward pressure if dollar supply does not increase proportionally. Likewise, exporters and businesses receiving foreign currency payments contribute to market liquidity by supplying dollars to exchange offices and banks. The balance between these inflows and outflows plays an essential role in determining daily exchange rate movements. When dollar supply remains sufficient relative to market demand, exchange rates often remain relatively stable. Market psychology also plays an important role in foreign exchange trading. Expectations about future government policies, anticipated central bank actions, international financial news, or regional political developments can influence buying behavior even before actual economic changes occur. If traders believe the dollar may appreciate further, they may increase purchases, temporarily boosting demand. Conversely, expectations of greater dollar availability may encourage sellers, helping stabilize prices. Sunday's market data illustrates that despite the slight increase, Iraq's currency market continued functioning in an orderly manner without signs of excessive volatility. The recorded differences between morning and evening trading remained relatively limited, suggesting that market participants adjusted prices gradually rather than experiencing sudden disruptions. Currency exchange businesses throughout Baghdad and Erbil continue serving thousands of customers every day. These include travelers purchasing foreign currency, companies settling overseas invoices, students preparing educational expenses abroad, and individuals transferring money internationally. Exchange offices remain an essential component of Iraq's financial infrastructure, particularly for customers seeking quick access to foreign currency. The difference between buying and selling prices, commonly known as the spread, represents a normal feature of foreign exchange markets worldwide. Exchange offices purchase dollars at lower prices and sell them at slightly higher rates to cover business costs and manage financial risk. The spreads reported on Sunday remained within ordinary commercial ranges observed in Iraq's currency market. The Central Bank of Iraq continues encouraging greater use of licensed banking channels for international payments, expanding electronic payment systems, strengthening banking services, and improving regulatory oversight remain key priorities intended to modernize Iraq's financial sector. Successful implementation of these reforms may gradually reduce dependence on the parallel currency market over the long term. Commercial banks also play a significant role in facilitating international trade. Businesses importing goods often rely on banking services to process letters of credit, international transfers, and foreign currency purchases. As banking efficiency improves, demand within informal currency markets may gradually decline, supporting greater exchange rate stability. Inflation remains another factor closely connected to exchange rate movements. If the value of the US dollar rises significantly against the Iraqi dinar over an extended period, imported products may become more expensive, potentially increasing inflationary pressures. Conversely, a more stable exchange rate helps businesses plan inventory purchases and supports predictable consumer pricing. Household budgets can also be influenced indirectly by exchange rate developments. While essential government services and public sector salaries are primarily denominated in Iraqi dinars, many imported products found in supermarkets, pharmacies, electronics stores, and automobile dealerships ultimately depend on foreign currency costs. Stable exchange rates therefore contribute to greater price predictability for consumers. International investors also monitor Iraq's exchange rate environment when EVE